Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. So Tesla just reported a surprise profit for the first quarter of 2020. Definitely a difficult quarter for Tesla and Elon Musk given the worldwide health crisis. Nevertheless, even with the shutdown in China and in Fremont in the first quarter for about 2 weeks each, exactly when Tesla normally does all of their deliveries in Fremont, they still managed to turn a profit. So I just got off the conference call, and so in this video, we're going to do a deep dive into the operations and financials to see how they did, what were the highlights for the update letter and from the call, and what clues can we find that hint about the future of Tesla. But first, please hit the bell button to subscribe and be notified of upcoming Tesla videos. Smash the like button to help support this video, and you can also support us on Patreon at patreon.com/themarketisopen, and we give a shout out at the end of each video to our patrons. Okay, so first I'm basically going to follow the Tesla update letter and give my take about some of the highlights, and I'll share my thoughts from the conference call in the second half of this video, so there's a lot to talk about. Let's start with profitability. $283 million of GAAP operating income, 16 million of GAAP earnings, that's the key metric that we're looking at, 227 million of non-GAAP net income. It's the first time they've ever been profitable in Q1, and it was during the global pandemic. So that's pretty crazy. Non-GAAP net income, they don't really count the share-based compensation here, so that number excludes that, even though it's a non-cash expense. They're giving a whole bunch of money to their employees, but it does show up in the financials. So it's amazing to see, though, how much profit goes towards the share-based compensation. That said, I think it's highly motivational for employees to make them owners of the company. And also, however, the shares get diluted due to the share-based compensation, even though it's a non-cash expense. $16 million in GAAP profit. So, I mean, Elon Musk has said in the past that Tesla would be profitable in all quarters going forward. The short sellers laughed at him because it didn't pan out last year, but so far it's holding up, even though I think the next quarter will also be challenging. Keep in mind that this quarter was tough because Tesla delivered only 88,000 vehicles. If it weren't for the shutdown, they probably could have done over 100,000 vehicles. They actually said in the conference call that it would have been a record if there wasn't any problems. They produced over 100,000 vehicles in the quarter despite being shut down for 2 weeks both in China and Fremont. Okay, so is Tesla going bankrupt? No, they're not. They have $8.1 billion of cash right now. That's up from about $6.3 billion last quarter. They also did a $2 billion capital raise in the quarter, yet the cash only went up by $1.8 billion. Why is that? Well, free cash flow was down $900 million. However, that's due to the inventory growing. So of course, inventory is the bane of existence of most industries. It's expensive to store inventory, but Tesla has no choice due to the shutdown. They also produced a whole bunch, about 15,000 excess vehicles that they still need to deliver. So that could also be a benefit for the following quarters. But I think when they eventually deliver these vehicles and they come back online, their inventory will go back down to being very lean as it was at the end of 2019. To me, this is the most important clue for the future so far, and that's gross margins. The Shanghai factory just started producing Model 3s kind of this year, a little bit last year. Already, they're saying that gross margins are nearing the same level as the US-made Model 3. So go back and replay that sentence 10 times. They hardly produce any cars in China compared to Fremont, yet their margins are almost at the Fremont level margins, meaning that this factory is going to be highly profitable, and you'll see that as they start to scale up. Also, Model Y has positive gross margins. That's pretty insane, and they touched on this in the conference call. That means they're accounting for the fixed cost of the factory depreciation, and yet they're overcoming that and making profitable Model Ys. So how many Model Ys did they make so far? Like almost nothing. So I think you'll see that margins will continue to rise, and this is a big reason that Tesla will be highly profitable going forward. Their factories are becoming super efficient. All of their capital spending is becoming extremely efficient at producing very affordable cars. 22.5% automotive gross margin last quarter, and now they're at 25.5 margins in this sort of crappy quarter. You realize they sold about 25,000 more vehicles last quarter than this quarter, and yet margins were higher, or automotive margins were higher this quarter. Just imagine what's going to happen when the Model Y really gets going, and the same with the China factory. Tesla says this is the first time that a new product has been profitable in its first quarter. By the way, Tesla shares are up about 9% after hours, after being up 4% today, and of course from the recent lows of $360 per share. So they're almost nearing their all-time highs. Okay, so quarter over quarter growth in production is down slightly. That's actually amazing because of the shutdown. I think it would have been up slightly. There would have been a record. They actually said that on the conference call that it would have been. And of course, that's huge comparing with Q4, which was the best quarter, and it's the holiday quarter of the year. When you're comparing that to Q1, which is seasonally the worst quarter of the year, so that's pretty amazing for this Q1 quarter. They're still way ahead in automotive from Q1 last year because they had easy compares. Last year was a pretty terrible quarter. Solar actually did pretty poorly. We'll touch on that. It's mainly due to installations. It was down 26% from a year ago, and it's down 35% sequentially. It is such a small portion of the company, however, but I'd still like to see that increasing. Elon seems to still be positive about this. It is winter, so it is bad for solar, though Tesla is saying that they did hit 100 solar roofs per week. So I'd like to see them ramp up deliveries, and that's going to be due to better installation processes. Storage was down in the quarter, but it was up during the year. And while superchargers are still increasing nicely, Tesla isn't slowing down on that. And we know that that's very important for consumers who are making buying decisions for a new Tesla. Okay, so these charts that Tesla uses are probably best seen as a comparison from last quarter, whatever they posted back then. So I've put the Q4 one below. So we know that they're working on the Berlin factory. That's not really news. Model 3 in Shanghai capacity is already growing, even though they just started making cars a quarter ago. So they've gone from 150 to 200,000. That's their capacity. So they're moving at plaid speed in China, aiming to produce 4,000 cars per week by mid-year. And so far, it's only been the standard range vehicle that's been produced, but they've opened it up to performance and long range now. And they're still planning to boost Model Y. It looks like about 100,000 units at Fremont. That's the star next to the 400,000 number here. And they can do that because there's a lot of shared parts between Model Y and Model 3. They've also said that there's been more Model Ys built in the first quarter than there were in the first 2 quarters when Model 3 started ramping up. So obviously the Model Y project is going extremely well. Finally, as Elon said on the conference call, and he's tweeted about this before, but Tesla is looking to announce their next Gigafactory in the United States. It could be Texas, but it might not be. But it's probably for sure going to be on the East Coast. Now, that in combination with Fremont being near its maximum capacity, they're currently doing 2 project launches at the same time. So there's no more room at Fremont. They need to have this new factory for their new projects. So if you look at the bottom 3 rows here, which is for the Tesla Semi, the Roadster, and the Cybertruck, it would be pretty cool if they did all 3 projects next at the same time. Currently, they're doing 2 product launches at the same time, which is the Model 3 in China and the Model Y in Fremont. So it'd be cool to see Semi, Roadster, and Cybertruck being pumped out of this new factory, which is yet to be announced. Okay, Tesla talks about some of their core technology that they released or improved on during the quarter. They've released traffic light and stop sign detection as a feature for full self-driving. We'll talk about that a little bit more in the call. So that's related to autopilot and FSD. They have this new dash cam viewer, the ability to see footage on your car's display. Most other competitors don't even have the hardware to support this, the big display and the cameras. The range keeps going up for Model S and X. There seems to be an error with the EPA estimates. Apparently they left the keys in the car. We'll talk about that later. Model S is already at 400 miles of range, according to Elon right now. And we'll see that as the EPA updates their estimates going forward. Model Y is also the most efficient vehicle given the new heat pump, especially in cold temperatures. You can see this chart, Tesla keeps widening the gap between competitors. They have nothing close to Tesla's range. Megapack is gaining traction. That's going to be huge for the energy side of things. That's the commercial sized battery pack for commercial use. That's really big, I think, because these are very expensive, but it seems to be getting down to the price where it's becoming disruptive to the industry, and it makes sense for these utilities and other companies to be purchasing these megapacks to run their operations. So they're saying demand is in fact above capacity. They obviously just need to turn up the factories and start producing these. Also, the Tesla ecosystem seems to be taking shape as 40% of solar customers also want to buy a Powerwall. So I think that's important, the Tesla ecosystem that we've been talking about. So at a time where most companies have actually pulled their outlooks, Tesla's sort of giving us a bit of an overview. It's actually kind of nice that there's no guidance really. Tesla says that their capacity to hit 500,000 cars will likely still be on track for this year. But of course, Fremont needs to open for that to happen. So obviously Elon wants Fremont to open as soon as possible. Tesla also has some great projects in the works. I think Model Y and China Model 3 will crush it for Tesla. And they say they're going to continue having industry-leading margins, something we pointed out that could keep getting better. Also, this is something that we've been talking about a lot for Model Y, and Tesla has highlighted it multiple times. They've provided these diagrams showing the mega casting, as Sandy Munro calls it, going from 70 parts down to 2. and later it'll be one part. We've been calling that the gigacasting, but who knows? This is going to be way more efficient. It's also unheard of. Even the two parts is unheard of for any other automaker. So competition seems to be behind in many areas as Tesla continues to innovate like crazy. Let's have a quick look at the unaudited financial statements. This is the income statement that Tesla has provided. Some things to note here. Tesla's revenue and expenses were both better than we actually expected. They did a good job on cutting costs for sales, general, and admin, but I think they can actually do better over time. It actually used to be a little bit lower, but since last quarter it went up, and I think it should hopefully come down even as they produce more vehicles. They've been pretty good at doing that. We did say that they would probably have a big loss for currency, and we do see that under other income. But it was more than made up for the strong operating results, so they did eke out a profit while everybody else was expecting them to have a loss. Also, the number of diluted shares has increased almost to 200 million from 187 million in exchange for boosting the cash position by about $2 billion. So I think that's a small price to pay compared to the previous equity offerings. Okay, so switching gears here to notes from the conference call, starting with what Elon Musk had to say. He's saying that new products are ramping faster and becoming more profitable even faster. One interesting thing to note is that Model Y has been even faster than Giga Shanghai in Q1 in terms of ramping up, and it's ahead of schedule that they were already ahead of. So Tesla is definitely ahead of schedule in some areas. Elon says that they're actually behind schedule in other areas. Now, Autopilot, I already said that they released traffic lights and stop signs this week. They feel very confident of the safety of this, and so by releasing it, they're going to be able to collect orders of magnitude more data than everybody else, especially at various intersections, which is what they need for this specific type of data in order to train their neural net. They're saying that the humans are already acting as labelers, basically, for the data as they pass through each intersection. Elon again said that you should be able to drive from your home to your office with no interventions by the end of the year. We'll see if that's the case. He said something like this before, but it didn't really pan out. So we'll see how far Tesla is. He's saying that they can almost do that already with the alpha build that he's testing. Model S and Model X range has increased yet again, 391 and 351 miles respectively. Again, the real Model S range is 400 miles due to an EPA error. They forgot the keys in the car and it killed 2% of the battery. However, Tesla isn't stopping there. They're not stopping at 400 miles. They're going to continue improving the range over time. Model Y, as we talked about, is going to go towards the single piece underbody casting probably later this year. It's going to take up about 1/3 of the entire body. It's again never been done before. Even the two piece Elon was saying is revolutionary. It's going to reduce the weight, the cost, and the NVH. You're going to see an improvement in terms of noise, vibration, and harshness as well. They also have the new heat pump, which is extremely good at low temperatures. And because of that, Model Y actually has about the same range as the Model 3. They've also been hearing extremely positive feedback in terms of the Model Y from customers. Now, what's interesting is that Elon is saying he's confident that this will be the best-selling product Tesla has ever made. So I think there's very high hopes for the Model Y, and because the SUV segment is the largest, especially in the US, it's way larger than sedans. I agree, this is going to be gigantic for the company. Finally, at the same time, other companies are cutting back on investments, something that we highlighted on our Can Tesla Survive a Recession video. But Tesla is pedal to the metal. Sometime next year, they're planning to become a global manufacturer. So while everybody's cutting back, Tesla continues to spend. And I think when they come out of this global health crisis, they're going to be stronger than their competitors. They're going to be a lot stronger than their competitors. In terms of things impacting their financial results, Model Y is profitable already and ahead of schedule, huge progress and cost control, and they've been profitable in the first quarter of production, which is fairly unheard of, especially for Tesla. Shanghai is profitable despite not running at full capacity, so it's very good for Shanghai as well. It's actually interesting that the Model Y factory is probably more advanced already than the Shanghai factory, so that knowledge from China is already being transferred back to the US, and it's allowing Model Y to ramp up even faster and become even more profitable than even Shanghai. So I think that's very important. Solar Roof has had launch inefficiencies. There's been some problems with the Solar Roof, mainly due to installations, which has been slowing them down, although production and demand are very high. So I think if Tesla can solve the installation problem, then they can finally ramp this up, especially when summer rolls around. Zach Kirkhorn, the CFO, says that They were pacing towards record deliveries had there been no disruptions during the quarter. Obviously, they won't see that until probably Q3 when things hopefully are back online. Q2 will probably be difficult as well. They're also continuing to deliver the 14,000 excess cars that they were unable to deliver in Q1. They are saying that there's going to be a huge improvement to deliveries due to local production, producing cars, at least on the continent, as Elon says, where they're going to be sold. So that's going to be very important for cutting down costs. They're still receiving orders despite the shutdown. So demand seems to still be there. And I think once people get back to work and things sort of come back online slowly, in a couple months, let's say, Tesla, or hopefully, Tesla will be able to come back is what they seem to be hinting at. So I think that's pretty good. Now, in terms of conference call questions, we're going to start with the institutions. So the first institutional question has to do with full self-driving subscriptions. Can Tesla deepen the data advantage, basically have more people using full self-driving in order to train the network? Because sometimes people purchase cars and don't pay for full self-driving. Could they pay perhaps a monthly subscription fee? And that will benefit Tesla by getting more people to use the product. So Elon actually says that he agrees with this, and it seems like he and the team have been discussing full self-driving subscriptions. So it will probably be coming later on, though it will make more sense to still buy FSD. So they'll probably charge a little bit more for the monthly subscription, which would be pretty good. They probably will make less money right away, but more money over time. So I think that's going to be good for Tesla, but it's also going to be great for the consumer. The nice thing about buying full self-driving right away is that you lock in the price. So as they release more features, you've already locked in the price because the price is expected to increase. However, if you're paying monthly, the price will probably increase over time. So I think this is going to be great. This is going to be highly profitable service revenue that Tesla can unlock, basically, something that wasn't there before. Okay, China subsidies are decreasing. However, Tesla has made really rapid advances to lower the price of the Model 3, or at least the standard Model 3 in China in order to take advantage of the subsidy. So they're announcing on this call that they are going to be lowering the price. And that in turn will allow people to use the subsidy. It'll boost the market size because it'll be cheaper. So you'll have access to more customers. And it'll make it very difficult for competitors to compete because how are you going to sell for a price cheaper than what Tesla is selling for? You're going to have to cut costs as well. And so far, all of these competitors have much higher costs than Tesla. There's also a question about can Tesla actually improve during the crisis? Tesla said that this has caused them to look very closely at the cost structure. So I think that's good. They can pull more costs out. Tesla did innovate a little bit. They have the touchless delivery. So Elon was saying that people would rather go to the dentist than buy a car. I think that might be pushing it a little bit. I guess it depends on your dentist. However, what I think is that competitors were actually caught off guard for this crisis, and Tesla sort of wanted a crisis. I think Elon Musk sort of wanted a crisis to see what would happen. He's even made some comments in the past saying Ford probably won't be able to survive the next crisis. I think Ford will be able to because they have so much cash. But I think he wanted to see what would happen if there was a crisis. Could Tesla work hard and come out of this even stronger? And I think they will, while competitors will probably fall behind, especially because they're cutting back on their electric vehicle spending. That's the first thing they're going to cut back on because it's just like an extra science project for them. It's not their core business. They need to focus on what's profitable right now, whereas Tesla's core business is electric vehicles. And so I think they're pedal to the metal, as Elon says. There's a question about battery day. In terms of battery day, there's a lot of exciting news. There's going to be probably the most exciting day in Tesla's history, according to Elon. So they do have some really good stuff in terms of batteries. Probably going to happen in the third week of May, probably in California or Texas. Now, in terms of full self-driving revenue, it's about $7,000 for the price of full self-driving. They're taking half of it and they're putting it under deferred revenue every time somebody purchases this software product. Currently, they have $600 million in deferred revenue. I believe that's actually up from $500 million. So a lot of people do seem to be buying this, but they continue to put it in this deferred revenue bucket, and they slowly release it over time as they release more features. So I think that's going to continue until, I guess, Tesla continues to add more features. But the price of full self-driving will probably also increase. So I think that's untapped potential for subscriptions, as we talked about. Okay, now we're going to look at the retail questions. There was a question about can Tesla grow at 50% per year? Elon says that's actually pretty likely. He says he's not sure. I mean, I think he didn't want to make a statement here. He says it could be 40%, it could be lower, it could be more. He said he'd be pretty shocked if it was less than 40%. So I think it's good to just leave it at that. You shouldn't comment so much on what he thinks the growth should be. If anything, they should shoot for as high as possible and not tell anyone The next question is, how many gigafactories do you have planned? Like, I don't think it's a good idea to ask these questions because I don't want Tesla giving away their plans. Like, we're gonna have 10 gigafactories. Like, why do people need to know that? So they didn't really comment on this, and I think that's good. He did say he's gonna announce the next gigafactory probably in about a month, but less than 3 months. For sure, it's going to be in the US, probably on the East Coast. He's also saying gigas have gotten bigger. Perhaps it's going to become sort of a terafactory. So I think that'd be pretty cool. As I said before, it would be nice if they did the Semi, the Cybertruck, and the Roadster all at once in this brand new factory and had Fremont take on Model 3 and Model Y and Model S and X. So I think that would be really great if they did something like that, especially to get these new products out faster. Although, I guess, again, batteries are a constraint, but if they reveal something cool on Battery Day, that could help speed things up. One interesting thing, again, is that they try to put as much as possible under the same roof and get as much vertical integration in the same facility as possible. That's very beneficial. Sort of like building a system on chip, I think. So I think Elon's building the factory sort of like how semiconductors are built. If everything is close together, then it's very easy to get from one point to another. Everything is side by side, as opposed to the way they have it in Fremont, where they need to go to Nevada, I guess, to get the batteries. Like, not everything's in the same place and not everything is streamlined. But with a brand new area where they can build a brand new factory, they can pretty much do whatever they want to make it as efficient as possible. Okay, in terms of the solar roof, they're producing 1,000 solar roofs per week. Hopefully, they're going to be installing 1,000 per week in the summer as well. I think that's the goal. Winter is not so great, and the global health crisis has not helped so much either. So they're building up install teams and third-party channels. Demand seems to be pretty good for the solar roof. So is production. It's all about the installation. Companies capable of installing it, like third-party companies, they want to partner with those. And there seems to be a lot of demand from other countries as well, especially China. So Elon Musk believes that this will be an international product over time. Now, somebody asked about this HVAC question, something that Elon has tweeted about. Like, I don't know why he answers questions about... I don't think he should be answering questions about future products, and I don't think people or investors should be asking questions about future products. A company like Apple, for example, won't say anything about future products, and the reason is because they don't want to give competitors a hint about what they're working on. So I don't think Elon should answer this, but he did kind of divert the question to something else. He did talk about a hospital-grade filtration system, the HEPA filter, which is quiet and efficient, and it's already in the vehicles. It's already in Model 3 and Model X, and Model 3 and Model Y have something of the sort, not as good as Model S and X, but still much better than other vehicles. So I like how he sort of changed the question to answer sort of a different question and didn't really talk about this future in-home product. There's also a question about acquiring utilities, acquiring peaker plants and converting them to use solar and batteries. Elon says he hasn't really thought about that yet. So I don't see why they would buy an inefficient, like a gas-powered plant just to convert it. I think building a new one sounds like it would be easier and better. But either way, Tesla is already a distributed utility. If they put solar roofs on everybody's house and everybody has batteries, they've basically become a distributed and highly reliable solar plant that if one area is down, they can divert power from a different area if there's excess power and basically manage that. So Tesla could really make a smart grid. I don't think they need to buy the centralized gas-powered natural gas plant in order to convert it to batteries. I don't think that doesn't make any sense when they already have something that seems to be better and they can manage it even more effectively than that. Last but not least, let's talk about the actual analyst questions from the conference call. So Adam Jonas, I believe from Morgan Stanley, starts us off. He says that a root canal is less painful than buying a car. I'm not sure about that. Liquidity at the end of April is his question. I don't know why he asked about that. It seems like a waste of a question because Tesla just said they had $8.1 billion at the end of March. Like, how much could it possibly have dropped in 1 month? Tesla actually does seem to be doing quite well. I don't think this was a great question. They also still have vehicles from the previous quarter that they need to sell. So what more does he need to know about this? Now, the CFO says that there's payments coming over the next 18 months that they're looking at, but it is something that they'll probably get through. Elon says that coming back to production in the Bay Area seems to be the most serious risk because it's taking a long time for production to come back online. It keeps getting delayed. And all of their cars and vehicles are produced here. So he does say that Tesla could weather the storm, and perhaps a lot of other companies won't be able to do that. Now, he's asked about his message to U.S. lawmakers. I don't think that's relevant to this Tesla earnings conference call. There's a question about how are Model Y gross margins positive? Is it because the parts are the same as the Model 3? So the answer is higher selling price. There are higher versions that they're selling the performance versions first. Because of that, just like the Model 3 launch, the prices will come down over time. Also, commonality between the Model 3 and the Model Y is a huge reason why they can be profitable. The other thing is that the manufacturing processes are the same as the Model 3. They also have an existing factory with an existing workforce and their whole ecosystem. So that's why Model Y can be profitable, and there's still room to take costs out to make a much better product. Then we have Ben Kallo from Baird talk about Tesla's battery cell strategy. Obviously, there's going to be a lot of competitive technology and pricing that they're going to be talking about more on Battery Day, and I think Tesla's going to leave it to that. He also asked about the board member, which might have something to do with Panasonic, but Elon says that he talks to the Panasonic CEO. They have a great relationship. The board member has a lot of global strategic experience and has nothing to do with Panasonic. I do have to say, actually, that the analyst questions are way worse than the institutional and retail questions that we saw that came from online. Gene Munster then asks, what about full autonomy by the end of the year? Sort of what's the timeline for that? And what's the path for the Tesla network? And also the path to robo-taxis. So Elon says it's going to play out as it has. They're going to release more functionality. They're going to do simulations and testing. They have a global QA team, I guess quality assurance. They then release it to small private beta testing, and then they also release it to people outside of the company, then to early access owners, and then a broad release. I personally, I think, would have wanted to know a little bit more about Smart Summon and how much that's improved over time. But Elon does say that there are, complex turns and intersections and busy malls and parking lots, so I guess he kind of touches on it. But basically, they need to continue improving reliability after release. So I think we sort of knew all of this, and then they need to provide data to regulators. Now, in terms of the Tesla network, he's hoping, I think Gene Munster sort of put the words in his mouth, but they're hoping for somebody would be in the car driving as part of the Tesla network in early 2021. I personally think it'll be later. Elon even said it was a sort of a hopeful number, so I don't think that's sort of in the plan. The robo-taxi guess would be probably sometime next year. Elon does say that punctuality is not a strong suit, but he eventually delivers, and he always delivers. So next year, robo-taxis in some markets. Again, he didn't seem too convinced, and if Elon's not that convinced, then I think it's going to take a little bit longer. Then we have Pierre Faragu ask the question, could gross margins have been even higher? I think we talked about this a little bit, but basically if you remove the headwinds, there would have been an increase in gross margin. So I think, yeah, that would have been the case. He also talks about a timeline for battery capacity increase. So I'm going to switch over to this picture over here. I think it's interesting that this is Tesla's battery module and pack factory in China. It's amazing how quickly this came up. So I think when they discuss their battery day in about a month, they're going to be ready to mention this and to talk about their strategy a little bit more, even though I don't really want them to give too much away. This, however, is not an empty building. There is stuff inside. Seems to have gotten pretty serious. I think this is the core part of the Gigafactory. And it's also the core part of the vehicle that's going to enable more vehicles to be produced. So it'll be interesting to see how Tesla's third-party suppliers for battery cells will fit into this module and pack production line. Also, Tesla was likely working on a way to get rid of the module. It's only going to be going from cell to pack. But that's probably going to take some time, and it'll likely be in the future, and Tesla's probably going to talk about that during Battery Day. Alright guys, well I hope you enjoyed this video. Please hit the bell button to subscribe and be notified of upcoming Tesla videos. Don't forget to smash the like button to help support this video, and you can also support us further on Patreon. Go to patreon.com/themarketisopen, where we give a shout out to our patrons at the end of each video. Thanks so much for watching.